Hello everybody, welcome to the weekly roundup from forexlivetoday.com as we look back at one of the craziest weeks that we have had in quite some time. Before we go any further, the big news that has come out just recently, today is Saturday the 6th of August, after the close of the markets on Friday. S&P Standard & Poor's, the credit rating agency, has downgraded the US from its AAA rating down to AA+. There are, I think, 17 countries now that have a AAA rating. It's largely to do with the deficit and your ability to control your deficit and the ability to pay your debts regarding countries that these ratings are given. So what does this mean? Well, in actual fact, nobody really knows, because it is an unprecedented event. Ever since ratings have been in existence, the US has had a AAA rating. Immediate impact, or things that we know for certain, are some funds, pension funds, and these big banks and funds that hold these US treasuries are not going to be able to hold them. It's part of their mandate that they only hold AAA rated assets, so they are not going to be able to. I'm sure there will be many that will be bending and changing their rules. Maybe they are going to say it's just one of the credit rating agencies. It's not until all three credit rating agencies downgrade that we will move away. But there is going to be some funds that are not going to be able to hold US assets. And what I mean by that is government bonds, such as the benchmark 10-year Treasury note that we look to for an indicator for risk, and which really the world uses as the benchmark of a risk-free asset. It's basically cash. Okay, so it's a massive event. This the significance of it is big. The actual impact may not be as big as what we might expect. Some of it will be priced in. It's not come as a huge surprise. The speed that it has come is more of a surprise than the fact that it has come. It has come earlier than many people have thought, including many of the major analysts, including me actually as well. So let's look to the charts and see what we have. Starting with capital markets, and you can see the past week panic and fear has gripped the markets, and we've seen major sell-offs across the world capital markets. Looking at the S&P 500, I think it's the biggest weekly drop since the 2008 financial crisis. So we're talking big moves here, really big moves. The whipsaw as well, the up and down in a single day, is quite staggering. If you look at the doji on Friday here, the day started off with good NFP figures out of the US, so it rallied, then it sold off so sharply, really sharply, and then in the afternoon the ECB stepped in with some of their own stimulus, buying Italian bonds, basically quantitative easing, for want of a better term, and the markets rallied up again to basically close the day where they started. But overall, you would say that decidedly bearish week, really bearish week for the capital markets. If we go over to London and look at the FTSE, you can see it's the same story. Again, the attempted rally on a Friday, but after the news on Friday, will be interesting to see how markets react. What if the further liquidation, people moving to cash, moving to gold, so that could be just a dead cat bounce and we see further downside. Okay, I mentioned gold. Let's look at gold, because one of the biggest beneficiaries of this decision from S&P to downgrade the US is going to be gold. It is going to move up, there's no question. People are going to look for safe havens. In times of crisis, people look for somewhere to shield their money. They don't look for big return. They just look for somewhere where it's not going to disappear, basically. So high risk is out, low risk, safe haven is in. If we take the US out of the equation, that doesn't leave us with a lot. So we're left with gold as a commodity, and then we're left with the Swiss franc, we're left with the Japanese yen, to a lesser extent the British pound and the euro. Now the euro has its own problems, so let's move on to euro dollar. Even with the problems in Europe, the sovereign debt, which was, if not the only, it was one of the major catalysts for the big sell-off in equity markets. We're going to see probably euro dollar spike up, or gap up actually, when it opens on Sunday, break this range here, and then we're going to see high volatility, probably big moves up, down, all over the place. If you're going to be trading, your guaranteed stops, small stakes is what I recommend. If we move on to dollar Swiss, the Swiss National Bank attempted to intervene. They attempted to flood the markets with francs. They attempted to devalue their own currency. They're worried that the strength of the franc is having an impact on their own economic recovery and their own economy, so they want it weaker. However, the Swiss franc is pretty much the safe haven at the moment. So money from it's going to come out of the dollar and it's going to go into the franc, so that's going to gap down on Sunday night as well. What happens after the initial move is, as I said, it's a wait and see, because it's unprecedented event. We don't know. We've never been in this position before. It is going to gap down though, and then from then on, who knows? Cable, we expect the pound dollar to gap up, probably to above this range high here, swing high, and possibly head up to this previous high here. But again, it's all guesswork. We're going to have to just wait and see. Dollar yen, you can see on Thursday, the Japanese Finance Ministry stepped in and intervened in their currency in an attempt to weaken it. It did have an initial impact, but then again you can see it started to strengthen again, and then dollar yen sold off again on Friday, and we would expect after the news, after close on Friday, that Sunday night, that this will be back down at the lows. These tsunami lows are looking like another revisit. So that's where we are with the majors. We are going to expect major US dollar selling initially, and then after that high levels of volatility. Speaking of volatility, let's have a look at the VIX index. Okay, so the VIX index is the volatility index. What it does is tries to, it measures the predicted volatility over the next 30 days for the S&P 500. So when we chart it, or when you look at the chart, what you're looking for is spikes, and high VIX levels means that there is a lot of fear in the market. It is also known as the fear index. So when it spikes, it doesn't only mean that markets will go down, but generally that's what happens. So you can see, if we look back to 2008, you can see here in the GFC, really high levels on the VIX, up over 75. We had another spike back here, 2010, back in flash crash, and you can see now the VIX is starting to spike up again. So we have made a new high, a new yearly high. What you want to be looking for is any spike up here, starting to break these levels up around the 45 mark. It's really starting to indicate that there's panic gripping the global markets. So I would be keeping a very close eye on this VIX index over the coming week, probably over the coming month. And something else I'd like to highlight is our 10-year Treasury note chart. This is the yield. So this is going to be interesting because traditionally we looked at this 10-year T-note, and if you looked at this chart here, a low yield means risk aversion. People do not want risk. Money has come into treasuries, therefore the yield that you get from them is very low. Now, when everything's rosy and everyone's feeling confident, everything's great, money goes into equity markets and high risk assets, and it comes out of these 10-year treasury notes, so the yield goes up. Now, with the downgrade, we're going to expect this yield to go up because it is considered now more risky. However, we're also going to see capital markets going down. There's a good chance of it. So it's really going to take a little while for us to adjust, or for us to see what is actually going to happen, because there are so many scenarios and ifs and buts. Let's say, for example, money starts coming out of these treasury notes and into gold or the safe havens of the Swiss franc, the Japanese yen. Now, investors also are not happy holding other perceived risky assets. So money starts coming out of capital markets. Is all the money going to go into the safe haven of the Swiss franc and gold, or is some of the money going to come back into these T-notes? People are going to say, hey, it's only a minor downgrade, one stage. It's only one of the ratings agencies. So let's put our money back into the treasuries. There's a there's a good chance that these type of scenarios are going to play out. So I am going to be sitting on my hands. You need to be up with the Asian market on Monday morning. That's where we're going to get our first indication of how the market is taking this. And then as you go through the Asian session, into the UK session, and then into the US session. So I guess the Asian session is going to set the trend into the UK session, into the European session, and then the US session will be, the final confirmation as to the initial reaction to all of this news. So I cannot stress enough that care and caution, and this is probably one of the times when not trading is trading. It's a saying that we have, where there are times when it's best to just sit on the sidelines, watch and see what's happening. So good luck everyone. Once again, keep everything small, be cautious. There will be money to be made. There will be huge swings, but also really high risk of cleaning you out. I am off on holidays, so I will not be updating with a video next weekend, but I will be back the following weekend when we can look back and see how the market has reacted to all of this, and we may have a clearer picture, and we may even have some defined trends by then. So good luck everybody. It's been a crazy week. I hope you're all okay and not suffering too many losses, and I'll see you in 2 weeks.